Today, we're going to examine the strategy that we incorporate in our trading experience. And everybody has to find out where it is that they have their strong points and where it is that they have their weaknesses. And depend on where you have your strong point or your weakness, then you're going to work on your strengths to make them stronger and avoid the weak areas until your strengths are adequately positioned so that you can deploy time, energy, and effort into other resources. The idea that many persons are faced with is that I don't have any money. What should I do? How can I get started in this realm, in this field? The first thing that I would suggest to you, you have to be humble and realize that in order to get where you need to be, you have to have a base, and that base would be a job. So if you have a job, there is no foul in having a job. If you don't have money, you need a job in order to get that money so that you can invest that money, trade that money, multiply that money, and then you can make yourself retired from that job. But many persons, after they reach a certain level, they are so proficient and efficient, and they are mostly introverted in nature. They still maintain their job even though they are successful. You see many persons out there charging people for different strategies and these kind of shenanigans. The question that I want you to ask yourself is, if these people were truly as good as they said they were, why would they be charging? Is it that they are making majority of their income based on your subscription to their program, or is it that they are making majority of their income from actual trading? Because you'll have a lot of persons presenting the facade of a reality, not taking you through the process step by step, giving you cliffhangers. And when you get into the program, you realize that, hey, this group isn't the right group for me. But I want you to understand that starting out, the information can become overwhelming, it can become debilitating in some instances. But what I want you to understand is that with gradual time and gradual execution on the information that you have, then guess what is going to happen? You will realize that you can do this, and you're going to ask yourself, why wasn't I doing this a long time ago? So today I want us to get into one of our apps as we examine the concept of our trading style, which is option trading. So majority of the times when we are trading uh, instruments or we are trading commodities, we tend to trade options. And the reason for that is that options is somewhat leverage. You don't have to use leverage in the process, but it is a leverage play, which means that if you don't have a lot of capital, you cannot buy 100 shares of a particular company. You can buy one contract, which is an option, and that there would give you the benefits of 100 shares of that company without paying the 100 share price for the combine of that company at that very moment of purchasing. So once you get that concept in your mind, you'll realize how much simpler it becomes. So when we talk about an option is basically a derivative of a commodity or a stock or whatever you want to call it, all right? It's basically a derivative. So basically, it would give a move similar in most regards in comparison to the underlining, which is what it is being derived from. So I know that this may be a little bit complex if you're just hearing this for the first time, but let me just break it down. I want you to think of a company that is publicly traded. A publicly traded company is listed on a stock market. That company, depend on how frequently it is traded, it may have options. I only trade companies that has options. It could be $5, $10. I only specialize in option trading. What I do, how I get my shares is when my options become due and they are at a good price and they become assigned. That is how I naturally get shares. So I don't go out buying shares directly. I buy options with the intentions of getting shares. And if the company is not performing how I expect it to perform, then I just sell those options, take my profit, and reinvest in something else. So that is just a simple dynamics of how the process works. Depend on how much capital you have, you'll realize that the less capital you have, the harder you'll have to work. Yes. And the less capital you have to get it right majority of the times. But the more capital you have, the less you need to be right. So a lot of persons may tell you that, hey, I am doing this, I'm making that, but you have to consider not just the amount of money that they are making, but the percentage increase that they're generating. If you have $100 and you want to make $100, do you know how much percent you'd have to go up by for that $100? You'd have to increase that 100 by 100% to take it to $200 to double your money. All right, beautiful. So say you have $1,000. Do you know how much percentage you'd need to go up by in order to get $100? If you have 1,000, all you need to do is to go up by 10%. Beautiful. What if you had $10,000? How much percentage would you need to go up in order to make $100? You'd need to go up by 1%. So, are you seeing the trend that is taking place? The more money you have, the less percentage you need to get the increase that you'd have to get when you're at the lower level. So, a lot of persons, when you reach a certain level, you don't really consider the percentage return anymore. However, percentage return is important for a new individual because it is the percentage return that is going to allow you to multiply your account. And if you want your account to grow to the vastness that it is possible to grow to, then you're going to need to work on percentage return. And one more thing that I want you to bear in mind is that on this journey, you are going to have to exercise and exhibit proper risk management. You heard me say that, proper risk management. There is no real need for you to have a small sum and you're risking all of it on a play that is very risky or volatile. And even if you're risking all of it, because sometimes when you're just starting out, you have to risk it in order to multiply. So that there is a caveat. You have to take more risky plays when you are at a smaller capital, unless you're going to plan to wait out an extended period of time. If you're not going to do that, you're going to have information that other persons have not yet had, or you're going to have to know something about the industry that many persons, the general population, the general investors don't yet know and understand. And when you have that leverage or that advantage, then you can progress into moving into what we call the strategic setup. All right. And when you have a strategic setup, you're not going to do it in the short term because you're going to lay the foundation for the long term. And then what you're going to do is to trade up towards that goal. All right. So that is just the idea, the setup that I want you to bear in mind as you progress on this journey. And I want you to also understand that there is no company that has your best interests at heart. What am I saying? I am saying that companies are run by individuals. Individuals have their underlying interests, and their interest and their bottom line is usually profit or for that raise or that promotion. So if you know that information, you will know that the management is going to work towards certain parameters, certain goals, certain targets. And if they are working towards those goals and targets, then you can set up your future position in line with those. Because who wouldn't want to make an easy $30 million just by hitting two goals of a particular price target? Think about it. Who wouldn't want to make 50 or 100 million? That's just how it works. So you're just going to have to put plans in place to execute based on where you are. So now we have covered what an option is. An option basically is a contract. It can be one contract, and that contract gives you a position, the right to 100 shares of a particular or underlying stock. All right, just understand that. So one contract equal 100, so that there is the ratio. So it makes it much easier for us to do our calculation and tabulations. All right, so if you have an option, you have a contract, there is going to be a strike price. And the strike price is the price that you are willing or you're agreeing that you would pay at this price for this option, putting a down payment on it if you're buying it, or you're selling it to someone. You're saying, I'm selling this to you at this price in the future on this day. So it has a strike price and it has a strike date. So all of those need to be taken into consideration. And though it has a strike price and a strike date, as it moves closer and closer to the date, there is something called theta decay. These are some of the Greeks that the option metrics has. The theta decay tells you the amount of the compensation that is being eroded with time. So in order for theta decay to not eat up the contract, you need what we call volatility in the market. So this is where implied volatility comes in. And volatility is just the ability for the stock to go up or to come down, up or down, So you have a seesaw. Have you ever seen some person's account? They're up 5 million, they're down 30 million, then they're up 100 million, and then they're down 50. So that is a seesaw kind of effect that takes place, but you have to know when to get in and when to get out. So in order to be on this journey with us, to get the best out of this experience, I want you to get for yourself at least the Webull account. At least the Webull account, but I would suggest that you have two, the Webull and the Moomooo account. I have leave the links below or in the description so that you can click on them and you can get started. Those are the only two accounts that I'm going to be teaching based on. I'm not teaching based on any other legacy brokerage account, because those accounts serve their purpose, yes, but for a person just starting out who cannot afford rather to be consumed alive by slippage or by fees exorbitant, then these are the brokerage that you will need, Webull or Moomooo. For this sitting, we're going to go into our Moomooo account just so that you can have an idea as to what it is like in the Moomooo account. And at the time of this recording, it is Sunday, 09/21/25. All right, and the time is now 6:51 a.m. So let us get into our account. So we're setting up the view so that you can see. So the account should be on the screen. And let me just show you what the link look like. So this is the Moomooo. We click on the Moomooo, right? And then this is the individual. Let's try that again. One, two, and three. Now let's get into the account. So before now, we had indicated that the Fed was going to have a rate decision. The rate decision has been determined, and we'll be having a 0.25 cut in the rate in this sitting. And then we're expecting two more subsequent 0.25 cut based on necessity. All right, so that there is just something for us to consider. So now, the Momo account, we started this account with $1,000 in our margin section, and we gradually added into the cash section a value of $900, right? So right now, the total value of this account is sitting at $8,764.70. That's just it. We only have one position in SoFi for our margin account, and that position is currently up 584%. Yes, you heard that correctly. And this is going to go to 1000 plus percentage. And at that juncture, we will reassess and determine if we want to go out in adding more to this account, or we are going to liquidate and go into another position. But we think that we're going to let this run until maybe about 10,000%, and then we will close this position. All right. And depend on how far it runs, we may just say, hey, let us just purchase all these 10 contracts, which would be about 1,000 shares of SoFi at approximately $35. So 35 times one contract, that there is 3,500 per thousand, per hundred rather. And then you add two more zeros to that. Then you add another zero to that, and then we are seeing ourselves at $35,000 investment into SoFi at this point. All right. So the reason we use numbers like two is so that if we decide to take profit, we don't have to sell everything. If we have one and we want to take profit, we have to sell everything. So we will not be able to ride the wave up. All right. And we usually use 10, 20, 25, 50, 100, 1000, 10,000. We make them easier, but when we're just starting out, we normally go for two, and then we work our way up. When we have success, then we move into the other one, or based on the amount of capital that we have in the account. All right, so this is just what the account looks like now. We have another position in SoFi. We think SoFi is going to reach to $40 by 2026. We truly agree, and we truly anticipate them reaching that price. And if they decide to reach that price, then we also have the option to buy at that price. In 2025, not so much, but we're not saying it's impossible. It is still possible, but we're not quite anticipating it reaching $40 in 2025, though it could. it would not be in our best interest. Yes, we'll make a lot of money on it, but we have not yet established all our positions in our other accounts just yet. So we don't want the price to rush up too fast, right? But this is our currently account standing as of Sunday, the 9/09/2125. All right, so we are in the month of September. Beautiful. And the two positions that we are focusing on are BBAI and SoFi. BBAI is more a speculative play, and SoFi is a solid play. All right. BBAI, if they get their game correctly, then we're expecting this stock to reach about $20 by 2028. 2027, 28, 28, we're expecting to reach about $20, all right? At least $20. If it can't do that, then we don't want to hold it. Now, let us look in our account to see how we have been doing based on the time that has elapsed. And let us go into the graph to see what it is that we're 98% in option, 0.34% in stocks, and 0.71% in cash. So 90% of our capital, 95, 98% of our capital, basically 99% of our capital is actually being invested at this juncture. So if you look at the calendar, you can see that we have had days when we lost capital and days when we have gained the capital. So if you look clearly, you can visualize and enjoy what is happening. So this is what is taking place. We have a return of 42% for this month of September. And it has not always been up, up, up. It has been up and down, all right? The previous month in August, we had 26.39%. The previous month before that, we had it, which would be July, we had a 40.58% return. And in June, that was a good month for us. We had a 73.6% return. For May, we had 10% return. And April, we were negative 11%. March, we were 20, well, March, we were 67% actually. And February, we were minus 58.04%. Yes. So you have to understand that different levels, different time, different return. And in January, we were at a 27% return, and it continues. Prior to this, we were not really trading in the account. We just had the account set up because Moomooo had just released their trading platform and we wanted to try it out. After we had assessed it, tried it out, sent money in, send money out, verify that it is working, verify that it is user friendly, then we progress to start using it to do training and investment teaching based on the fact that it offers fee-free trading. So that there is something that we should consider. And for anyone starting out that is new to investing, who wants a platform that will not charge them exorbitant fees, then this is a platform that I could recommend. One of the two platforms that I will recommend. Moomooo is a good platform. I have been using them. They send your capital on time. It takes a while for the capital to reach in if you're doing ACH, but other than that, you can get your capital out. It doesn't lock up your account and all those kind of shenanigans, all right? So these are just some things that we need to understand and appreciate. Now, let us get into the meat of the matter, let us jump over now to Webull. And Webull is another account that we have that we so love. We have been using Webull since it was launched in the United States. So we have been using Webull for quite some time. This account is a fresh account. I think we started this account this year. I told you that after the rate cut decision on Wednesday, today is Sunday, what is going to happen is that the account is going to go down to 5,000, or the account is going to go all the way up to about 10,000. So we're almost there at this 10,000 mark. It didn't go down as much as we would have wanted it to. We would have preferred an overreaction so that we could have gotten some of our positions in place, but that didn't happen. So what we're going to have to do, we're going to have to reassess and recalibrate. But as you can see, looking on the device, this is where our account balance is at present. So let us pull it up on the computer so that we are both seeing the same thing. All right. So if you're looking at it on the computer, you're going to see something slightly a little bit different in that there is going to be an decrease or lack thereof because the crypto portion is not there. The $47 we have in crypto, that there is not being reflected. So if you have 125 plus the 40 $7, then that is going to carry up to about $177 plus or minus, right? Now, let us get into the account. We're going to go into our individual account, which is now at 11,000. But this is not just $11,000 that we have uninvested. We have quite a bit, like 50% invested, 50% waiting to be deployed. Let me see if we can get a visual and show you exactly what it is that we have been observing based on our calendar. So for our calendar month, these are our progressive increase, all right? And you realize that on Tuesdays and Wednesdays, we are seeing a pattern in our trading. On Tuesdays and Wednesdays, our account goes down. All right. So just bear that in mind. In this month, that is what is happening. Let's go into August, and we are seeing it a little bit being reflected as well, not as consistent, not as straightforward as the month that I developed. So when you see your account moving in certain methods or certain directions, this is telling you when you should be buying. Because let me just simplify it. If you are just starting out, you don't have to be smart. You don't have to be a rocket scientist. You don't have to be a quantitative investor. All you need to do is to exercise good sense and good judgment. Right. So this is it. If you're going to buy something, you're going to buy something when it has a discount. When it has a discount is when the market is panicking. It is in red, which means that the market is tanking. People are selling out because they need the money stat. And that is something that you can always count on, all right? People tend to invest money that they cannot afford to lose, which is not the best way to invest. Any money you put in an investment account, you must say this money does not exist anymore. So all the millions of dollars you have, all that money does not exist because tomorrow can come and something can happen and just wipe you out. So with that in mind, only invest money you can afford to lose. All right, especially when you're just starting out, because you may have a lot more losses than you have wins just starting out. But if you have the right teacher, you can do appropriate risk management and just go into positions which are going to be profitable. The positions that I'm going to give you are usually some of my safest positions for persons with small capital or persons who just want to try out the concept that we have been presenting. So I will give you the place, I will suggest them to you, I will put them down, and then you will have to decide as a CEO of your portfolio if this place suits your investment style, your investment time horizon. The thing that I want you to understand is that if you have all the time in the world, then you can take 20% per year. But if you have $100 and you're going to get 20% per year, that is the first year you have $100. The second year you have $120. The third year you're going to have a little bit under 150 or thereabout, all right? And it's going to take you forever almost to make anything substantial that you can actually retire on. I don't want you to be thinking about your money problems. I want you to put the money problems aside so that you can enjoy life as how God intended for us to enjoy life. But you have to decide what is in your best interest. I can only show you what is possible, what is reasonable, what is probable, but you will have to make the final decision as to if this suits your style. Now, let us continue. Let us look at July and see how it shaped out. All right, so this is showing us that there's a switch on Mondays and Fridays in July. The market tend to go red. Right, so June was a very good month for us. Let us see what June says. Even though June was a good month for us, we are realizing that we were down on Tuesday. So Tuesdays is a day that we can predict to be one of the days that the market should go down based on our investment style. All right, so this account, as I told you, is a very fresh account. I created it just for the purpose of teaching, edification, elevation, empowerment, emancipation. That's the purpose of this account. So before now, I doubt there is anything before me, not in this account, but in my other accounts, there are things way before that, because I have been with Webull since it just started, before it even went on the stock market. We were with them and we were enjoying what they had to offer. So with this site, we can expect that maybe on Monday the market should be going to green, but on Tuesday it may come down. But let us look at the amount of increase and decrease over time. We're realizing that on Wednesday the market will go down more cumulatively than on Tuesday. But what if there is not a decrease on Tuesday? When would we get into position? That there comes in with the graph and understanding how to position the graph so that you can make the best from the graph. You have to be strategic in your positioning. So these are just some of our position that we're trying to get filled. So for 2028, we would like to purchase some SoFi calls at the $40 strike price, and we're willing to pay $650 today to get that option to purchase it, which means that your break even is going to be about six $46.50. So let us just say $47 should be your break even. So in order for you to just make it out, it has to reach at least $50 for you to be in that position. $50 is the mere minimum. And as we indicated to you, we believe that SoFi will be about $75 based on our reassessment by 2028. For 2025, we're looking at about $35. That is reasonable to ask. For 2026, we're looking at about $50 at most, but we're really looking at about $45. And for 2027, we're looking at about $55. And then for 2028, we're looking at anywhere from $70 all the way to 120. And you may be saying that sounds ridiculous. And I would say, yes, it sounds ridiculous when you don't have all the information that you need. And when SoFi was at $6 and we were saying that, hey, this is a $30 stock, many persons shocked and say, no, this is going to zero. But is SoFi at zero? No, SoFi is not at zero. When Palantir was at $15 at the IPO, and I said that this was a good company, many persons said, oh, no, no, Palantir is not a good company. Palantir went down, people still didn't buy. Palantir is now 180, $90, and people are just getting ready to buy. It's the same company doing basically the same thing, having more contracts, yes. But people have to look to the future. If you look to the past or you look to the current, not looking to the future, then you're gonna miss up a lot of good investment. I don't want you to miss some good investment. And that is why I want to show you some investments that you can consider when you are on this journey. All right. So let us see if we can get some details because I think that I wanted to show you how much we had in cash. So in options, we had $5,073 in options, but we have in cash, which means that we are waiting for our capital to be deployed. We have 5,350.49. Forgive me. And for stocks, we have $702 at this moment. And that stock is BMNR. Yes, BMNR is a play that we're going to be watching. I think that BMNR is going to go to about 125 in the short term, which means that in the next 6 to 8 months, 6 to 9 months, let's say 6 to 9 months, it should be about $125. All right. So I bought it at 65. I know I bought it at the high, but I just bought it because I want to watch it. I didn't buy to put a real position in it just yet. In this account, I didn't have the capital to do that because remember how we're doing with this account, so we have to do it like a regular person. But in my other account, when it fell to $45, we picked it up, we soup it up just like that, and now it is at about 60 something dollars. So you have to just know the companies that you think are profitable, and we're playing with real life cash. We're not doing any paper trading. I have never done paper trading in all my life. I don't see the need to do paper trading. But if you think that you want to do paper trading, then do that. But I have never done any back testing. I have never done any paper trading. I have no intention of doing back testing or paper trading. I have the idea, I have the strategy in my mind, and I just execute accordingly. And it has proven to be rather a profitable endeavor. In the initial stages, I used to make a lot of mistakes where it comes on to selection, time, expiration, because I only specialize in options. And that there was a little curveball. But after I got the rhythm, I realized that, hey, this is not so bad. And since then, there is no going back. I do enjoy stocks if I just want to hold something as collateral to sell options on it. But personally, I don't really own any stocks outright. All right. But I do have stocks that I hold because they were assigned based on the option contracts. So it is uh, quite unlikely that I will go out and just buy stocks to hold in a long-term portfolio. I just buy the stock so as I can watch it on my portfolio or in my portfolio to see its movement up and down on the percentage increase and decrease. All right. So this is just something that I want you to be aware of. Now, let us get into the option train. Let's go out. All right, so this is our account, and oh, let us get into the rot account. So the rot account currently, let us clear this off. So this here, $80, that's out. So right now we only have about $40.57 because this expired worthless. So we are down. How much we are down? We're down $70. That's what it's saying. So we have $10 in stocks, $70 in options. We lost at $70 because that position was not profitable. All right. So we lost all that money in that $100 Pro 40. All right. But that's okay. We're going to make that back up. It's very difficult when you're starting from figures like $100. You're trading with $100 and you're doing options. It's better you do futures with $100 than you do options with $100, because with futures you don't have the time decay, and you can get in, get out as fast as you want, as many times as you want when you're trading futures. So that there is something that you can consider as well. And the beauty about Webull platform is that it offers the ability for us to do futures trading as well. So if you're interested in that, you want to learn that, then you can get on this platform and just work your way around. All right. So now let us get into our account. Let us see if we can do a quick search. Let's look at the market. All right, looking okay. But let us just move into some of our top stocks or top picks. So SoFi is one of the stocks that I really love. This is a stock that you need to get. I believe that this stock will make millionaires. It has made a few millionaires before. Yes, I know that. But it can make millionaires even at this price of $29. It's saying $29, but let us put it at $30. At $30, this stock is set to move upward. When this stock is included in the S&P 500, this is going to be a game changer. This is when it will reach 100 plus. Remember Robinhood, when it reached into the S&P 500, what happened? Very good. Remember Palantir, when it reached into the S&P 500, what happened? Very good. And these are all companies in the same realm. The reason I mention these companies because I had these companies on my radar. I was invested in Palantir. I never touched Robinhood because of the saga. Not that it was a bad trade, but I just didn't like the whole saga that took place with the GameStop situation. I believe that people should be able to buy and sell, but when that happened, it caused me not to have confidence in that platform. And not only that, that platform has some bias towards, let me not say, but yes, I have not had the best of experience. All persons have good experience with wood, but I stay away from that platform personally. All right. So if you have that platform, fair enough, do what you have to do on that platform, but I will not be directly involved with that platform at this juncture. All right. Sometimes when you forgive, you have to just leave things as they are and move forward. All right. But nevertheless, everything that that platform has, basically, Bull has that as well. All right. And Bull platform, let me pull that up because a lot of persons like to get into things that are overextended, that everybody is in, which is not a bad thing. But if you're not strategic, then you may find yourself in an uncomfortable situation. So for Bull is currently at $13. This is Webull. This is the same kind of platform like Robinhood and like HOOD. And this platform has almost everything plus more than Hood has. It has level 1 order book, level 2 order book. It has level 1 and level 2 option chain. So when you go into the option, you can see in real time what is taking place. So you just have to know what it is that you want and which platform serves your best interest. But any platform you have can be used. But I will not be mentioning or getting involved in learning any new platform other than the two that have been working. If the two that I have currently that have been fully functional, fully efficient, meeting the needs of my teaching and training sessions, if they have something that caused me to have an aversion, then I'll investigate other platforms. And no, I will not be investigating platforms which I have no direct confidence in. I have to have confidence in a platform to even recommend the platform. To recommend a trade, I usually have at least 75% confidence in the position being profitable. And if I'm going to do it publicly, then that has to be at least an 85% to a 90% probability of it being positive. So that is just my position. I operate based on the principle of integrity. All right. And if I say something and it doesn't happen the way I don't have control over everything, but what I have control over, that is what I will share with others. All right. So consider bull if you want to wait maybe 3 to 4 more years for it to get up. It may get up before that, but I cannot guarantee that it's going to get up. Looking at Bull is at least a $55 company, and let's look at the price today. Bull is a $55 company, and look at the price today. The price is $13.29. What I'll do, knowing that it's a $55 company, I would go to 2028. I don't know when it's going to wake up. But if it's a $55 company and I buy it at 25, think about it. And it goes to at least 50. It doesn't have to go to 55 that I think that it is. Well, I have a high probability that it is. I would just go here and take 100 of these contracts. That's it. Nothing more, just simple. Buy 100 of those contracts. If I have time and I have the money, the resources, and just let it sit. That's all I'll do. And then I'll wait and see if this here will be. So this here 100 contracts at $4.60 would be 46,005 cents, and the estimated transaction fee is $5.11, right? So that $5.11 at the end is actually the transaction fee. So then we just click the confirm that. Or we have to wait until it is actually trading hours so we can buy this contract. So that is what we're gonna look into doing. All right. So that is just a position that I am telling you that you could consider. And remember, we said that on the 09.21.25, that is September 21, 2025, that is Sunday. And we are saying that by January in 2028, the 21st day, the option contract expiration date is the 21st of January 2028. The strike price of 25 at $395. We think that this is a good price. That is just something for you to consider. I am not telling you what to do. You have to do what you want to do. All right. But as I said, this company is a slow mover. Another company that I want to present to you is PayPal. PayPal is a crazy company. Not a crazy good, a crazy bad kind of way, right? Not is a bad company. It's just that the price of this company is moving downward because people don't yet understand what PayPal is about to do. So it has been trending downward, but there's nothing much that we can do about that downward trend. I am looking to finalize my position when it comes all the way down to about $55. That is where I want to finalize my position, and I have some positions that I have already preset in order to be activated when that time comes. So that there is something that you want to consider. Another company that we have spoke about is PLTR. Palantir. Palantir. Oh, Palantir. Palantir is a beautiful company. Palantir is a $250 company. Yes, you heard that correctly. A $250 company. It is at 182. Look at it. Do a calculation. Take your time and do a quick calculation and tell me, what do you think it is going to be in a few moments? If it is at 250 at this time, all right, so Palantir is also a company that I want you to keep on your radar. If it is at 182 and it's going to be at 250, how much percentage increase and where would you position yourself? So that there is something for you to consider. I'm not going to get involved in that, but I would suggest, I think it's a 250 company. I would go all the way here 2028. I know it's going to be 250 before that. If you want to spend $45, which means that it has to go to 250 plus 45, which means that there is going to take it to 250 plus 45, that is almost 300, because that there is 295. So 295, that's what the price is indicating, that you break even at 295. All right, so I think that it's going to reach 250 by 2027. So let us go to 2027, look at 250 and see if it's a good price. It's still priced too expensive. Okay, it's priced too expensive for 2025. Let's say 2026, by March it should be at 250. Is this more reasonably priced? This is more reasonable price. And I would go March, and I'll just take a small amount. If you don't have enough money to take it at 2028, then you can consider taking it at 2026. You have some time, right? And what you're going to do, you're going to get out of it. If you think that it is not going in your favor, you have to have what we call risk management. So that is just one of the companies that you can also consider. When you have established your longer term position, then you put 90% in the long term position, then with 10% of your account. This is how you're going to set it up. This is the easiest way I can teach you. With 10% of your account, whatever the account balance is, you're going to trade with that in the short term. So you're going to do weeklies, or you're going to do monthlies. So you may make 12 trades per year, or you may make 52 trades per year. It all depends on if you do weekly or you do the monthly, or you may even do the bi-weekly trades. So that means you're going to do about 24 trades per year. So it all depends on your style, your needs, and what you feel comfortable doing based on the time that you have available. Some of my friends, they only do trading like 2 times for the year. They only come in the market when the market is in trouble. They're on their vacation all year round. Well, business vacation, right? And they really enjoy what they do. Come in the market, make some money, disappear again. That's how they do it. So you have to decide what kind of life you want to live, how you want to live it, and if this is best for you. It doesn't matter what kind of education you have. You could have no education. This here can work for you. As long as you know, or you can distinguish between up and down, red and green, right and left, one and zero. You're good to go. That's basically it. It's that simple. All right. So what I want you to do is to also, we're going to go on the computer at this time, and let us try to click in SoFi. If you have the Webull app, I want you to set it up similar to this one so that you can have a visual as to what we're doing. So option, okay, now, so we're looking at the Webull on the computer screen, and this is how it appears. This is our graph. You'll realize that we have a different kind of graph than you're accustomed to. So in order to change that, we come here to the graphing section and we selected this Chinese graph. This Chinese graph is the best. We don't use the candlestick. That is what most persons tend to use. We don't use it mostly when we're teaching. We use this one because this makes it foolproof. You can buy on the red, but you have to have a green to indicate that it's time to buy. When you have one red, don't get scared. You have to have three reds before you get out. All right. If you follow that principles, you will make money. And we do this on the daily time frame. All right. If something happens crazy in the market, then it may throw off your system, but it doesn't mean that the system is not working. So that is just something that I want you to consider. All right, that's the first thing that you're going to do. And what I want you to do is to also set up some indicators. And the indicators that I want you to set up is the support and resistance indicator. Remember, we're keeping everything as simple as possible. You want the support and resistance indicator, and we also want to have the volume bars down bottom, so we know if people are buying, we know how much they are buying, and we know what they are selling. All right, so this is how it should look, right? So you're going to go into your indicator section, and then you're going to select which of the indicator you want. So the resistance and support, or support and resistance, is called the pivot indicator. So this is it right here. And the MA is the moving average. So it's telling you if the average is going up or going down. That's a little line that you see right in there. So you need that, right? And the VWAP is the volume weighted average. All right. So that there is important for us to have on the graph as well. And some persons use the alligator. I don't really use the alligator. And if you are curious, you can also use a super trend to see if it's trending up or trending down, but you don't have to use that. The reason you don't have to use a super trend is because if you already have this chart, it takes away majority of the other indicators that you would normally have to use. All right. So you can put up your volume bar if you want your volume bar to see what is happening. Whatever is in your best interest to do, you can do that. You have the RSI, but I don't use the RSI, but you can use it if you feel comfortable. So this is just how our charts are set up. It's so simple. You don't have anything crowding out stuff. It's not overcomplicated. It's not green, red, green, red, green, red, green, red. It's not like that, like the other candlestick graph. We like the candlestick graph, but we don't like the candlestick graph. You understand what we're saying? So this graph is a little bit difficult for the average person to understand. Here, a person may say, oh, it's time for us to sell. No, it's not time for you to sell. It's time for you to continue to accumulate. So this graph, if you're a seasoned day trader, then this is what you're going to do. And we use for our trading strategy a 1 day time graph. All right, that's what we generally use because our strategies are for longer term, not for the immediate quick in and out day trade. If you're going to do the quick in and out day trade, you're going to need the 15 minutes. chart, you're going to need the 1 minute chart, you're going to need the 30-minute chart, and you're going to need the 1 hour chart. And you're going to have all of them lined up on your screen, and you look for the patterns in all of them that is consistent, and then that there is another kettle of fish. But you can do this. I believe in you. I need you to believe in yourself and position yourself in such a way that you can succeed. Now, there is another stock that I should have mentioned, BBAI. Yes, hopefully I made mention of BBAI. So right here where you have the indecisive candle, right here, let's pull it up. Right here, you're seeing it, that indecisive candle, that green indecisive candle, that tells you that the market is planning to, it wants to go up. So you could buy here the next day at the low of this candle as best as possible, and then you go up with the market, right? So this candle here would have faked you out. You'd have seen this, then you have one, so you have one, two, you wait on the third one. The third one usually give you the exact direction. Majority of the time, the third one is the one that you want to enter on. All right. So if you want to be previous, you can get in on the first, but you need confirmation. If you don't have confirmation, it can go south real quick. All right. So just look at the chart and look at the candles. Look at it. Every time it changes, bam, 1, 2, 3, you stick in. 1, 2, it would knock you out, but you're not gonna come out. You wait on the third day, and the third day is when it took off. All right, and you are gonna know when you're gonna get out. 1, 2, 3, you normally get out. If you want to get out here, you could have gotten out here, and then you see it's still moving. You continue up, and then consolidating. 1, 2, 3, it's telling you it's going down. So you just have to know how to read the chart and see what works best for you. If you are here and it keeps coming down, 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 you have to know that the red means it's going down. So you need to be in the short position for it going down and the long position for it going up. So yes, there's another set of words that we need to make mention of: the short and the long. Short means going down. All right. So short basically mean you buy high and you sell low, and the difference in there is your profit. For long mean you buy low and you sell high. So either way is okay. Just know that it is doing what you desire for it to do. All right. So short and long, red and green, up and down, plus and minus. That's all you need to know. Well, with that said, we have done quite an extensive 1 hour session, and I hope that this information was important to you, and I hope that you would have gotten the place which I indicated. So if you want to take those plays, those are to your discretion. I have nothing to do with them. I am only showing you what we are seeing so that you can make a decision on your own. Until we meet again, be blessed and see you in the next one.